Hi, I'm Grace O'Mara. Like Sam said, I'm a second-year MBA student here. I'm a career switcher. I used to work in fashion. I interned in development this summer and absolutely loved it. Growing up as a kid, my mom works in commercial real estate in the Midwest, and you always think what your parents do is normal. So I was like, real estate, like this must be an industry dominated by women. I saw my mom and her coworkers, but start networking and you're like, oh, I think it's not exactly dominated by women. But entering this industry, I've never doubted that this is somewhere I belong because I have such an excellent role model in my mother that I know as a woman I can succeed in this industry. And as I've been exploring a career in real estate, I have gotten so much help from women in real estate in New York City. I'd say probably half, maybe even more of the real estate networking events I go to are hosted in some way by a women's real estate group, such as Girl Gang, which is very fun. Highly recommend their events. And it's so helpful to have women mentors in real estate. It's so nice when people say like, hey, you can ask me stupid questions, like don't worry about it. Like what is title insurance and why do you need it? Michelle can tell you all about that if you don't already know. Or is it okay to wear sneakers at work? And I think if your outfit's nice enough, it's acceptable. So yeah, and with that, so thank you guys all for coming. I hope you guys make some great relationship here. And with that, I'll hand it off to Jackie.
Thanks, Grace. My name's Jackie. I'm the other co-president of the Stern Real Estate Club. I'm also in my second year at Stern in the MBA program, and this summer I worked in multifamily acquisitions and also a career switcher. I don't know how many MBA students we have in the room, but if you're a first year, just know that it's possible. We're getting there with the help from Girl Gang and other networking groups in the industry, which everything that Grace said I would echo. So I'm moderating tonight, and this is our great panel. So can I ask you to start by introducing yourself? Tell us what you studied in school, what you do now, and how long you've been in the industry. We can start here.
Okay. Hi, I'm Kelly von Schmid. I went to school at the University of Alabama with my degree in accounting, and then completed the NYU SHAC master's program. So familiar with some of the courses some of the students are probably taking at night. I did a lot of that while I was working full time. So I spent 10 years at BBVA, which is a Spanish bank, in their management training program is where I started, and then cycled directly into real estate, commercial real estate loan underwriting. Moved to New York and opened our lending office here. And then about a year ago, I left and went to JP Morgan. So at JP Morgan, I'm a loan originator for our separate accounts and debt funds, financing all asset classes in commercial real estate.
Hi, I'm Tatiana Melamed. I'm a VP in the Acquisitions and Capital Markets group at Vornado, which is a big office and retail landlord in New York. I went to University of Michigan, graduated with a BBA focused on finance, and had a history minor as well. I've been in the commercial real estate world for, say, about 6 years, and then had spent 3 years in finance before. So I started my career at UBS in their investment bank doing corporate debt capital markets, working with REITs, but on a high level, and then made the transition over in 2017.
I'm Moira Concannon. Nice to meet everybody. I went to the University of Virginia undergrad and majored in Spanish literature, which was a questionable choice, and I'm not even fluent, so I don't really know what I was doing. Then I worked in investment management for 3 years, went to business school at Wharton, and made the switch into real estate about, about 8 years ago. Worked at CIM Group in LA and then New York, which is a developer slash fund manager. And then I was at Drake Real Estate Partners, which is probably never heard of it, except I know one person here has. It's a middle market real estate PE fund, which means we made equity investments from about $5 to $20 million in deals across the country. So I did that for a few years in acquisitions. And then as of a few months ago, I left to join a good friend of mine from business school who's based in Texas. And we do affordable housing deals, like low-income housing tax credit deals for people who are familiar, working with local municipalities or nonprofits to help them solve affordable housing issues.
Hi, I'm Marnie Adams. I work at Bayview Asset Management. I'm head of commercial closing there. Nice to meet all of you, and thank you for having me. So I have been in the commercial real estate industry for over 20 years now. But I still like to have fun and go to really fun events. So I am definitely full-on member of Girl Gang. None of the stuffy events. I started my career, my background is in law. I've always been in commercial real estate. I started at law firms and eventually made my way to Thatcher Profit and Wood, which was a firm back in the day known for commercial real estate finance. So I really honed my career towards that area. Then I made the leap also to UBS and was there for 7 years. I made the leap in the beginning of 2007 and thought it was like the best thing ever. And boy, oh boy, that Great Recession was very interesting. But luckily, I weathered that with UBS. I was working in the commercial real estate finance group, working on all sorts of kinds of commercial real estate loans. And then when UBS went through some distressed time, they created something called the STAB Fund to move all of their $40 billion in distressed assets over to this fund and manage it with the Swiss National Bank. I was part of that management team to wind it down successfully. And successfully for UBS and the Swiss National Bank. And then in 2014, when that wound up, I went to JP Morgan in the CIB over there and was a transaction manager closing loans for that group for several years. I ended up doing a little CRE real estate tech for a company called Breather for a couple years. And then Bayview offered me the position of head of commercial closing for their commercial real estate finance group that they were starting. And I had never started a group with my boss. He offered me a great position there, and I've been there for 4 years and have been really enjoying it. So.
Thanks, everyone. I love that it's such a diverse array of experiences on the panel. And Mara, I can relate to you. I studied Latin American studies, so love a pivot. Love a pivot. Okay. So how have your roles and sub-industries within real estate changed over the past 2 years as an outcome of the pandemic and its economic implications? Anyone is welcome to start, but Kelly, we could start with you again if you want, or...
Okay. So at the time when the pandemic hit, I was at BBVA, which is a Spanish bank. We were doing balance sheet lending, which is a little different from what I'm doing now. Construction loans and term facilities. It definitely came to a halt. I'm sure, as everyone probably remembers, it was a crazy time. And in that role, we were responsible for management of our own loans once they closed. And so it really, at that time, the biggest change was going directly into hands-on asset management, reviewing the loans we had in the portfolio and re-underwriting all the properties. And we were working, Saturdays, Sundays, we were PPP loans. We had some hospitality operators that had a really hard time during that time. So a little bit of everything. Now it was a little back to normal in 2021, I would say. But that's probably the best view I can have on it.
Yeah, so I work primarily in the office business, so definitely had quite the shock. I would say, similar to a lot of people's experiences, basically the first few months of COVID, just become an asset manager. So normally, whether it's a loan or an investment, if you're on the deal team, a lot of times once that closes, you don't live with it day to day. But when you're, wondering if every single tenant in your portfolio is going to pay you rent, how your office is going to become safe, kind of all of those operational questions became front of mind for the entire company. So certainly, again, sitting at my computer, going tenant by tenant, has someone gone to the office to collect the rent checks? Is it safe enough to do that? Literally operational questions that, normally I'd never get involved in. I'd say to now, it's certainly very different. The office market now is not what it was before COVID. And I think the one theme that has continued to present itself has been the bifurcation between quality and kind of more commodity stock. So if you look in New York, there's still been a lot of landmark leases. We've been lucky that our portfolios had, I think, over 4 million square feet of office leases since the start of the pandemic. But, across the board, those premier tenants are going to new and redeveloped buildings. If tenants are going to make commitments, they're going to need to lure workers back, and it's going to have to be a great located space, new space with amenities that, don't compare to what used to exist. So I'd say in that, I think, certainly feel lucky that I've been involved in a lot of Vornado's redevelopment projects, and, it's kind of been a little bit of proof of concept. So we signed a full building to Facebook during the pandemic. We've signed leases to Apple, other tech tenants. And so certainly been, a bit of those tailwinds have helped us. And kind of another side I'd like to talk about is the capital markets. So capital markets, especially for office, have been very choppy the past few years. I'd say, 2020, almost no loans got done. 21, floodgates were open across the board. And, now we're in very uncertain and choppy conditions. And I'd say that question of qualities certainly presented itself. So again, feel very fortunate that we have a very solid balance sheet. We're investment grade rated. So even in 2020, we were able to do the refinancings we had to do. And 21 was a great market for everybody, including us. This year, certainly choppier, but we've been able to close what we've needed to. So I think it's certainly been kind of a tale of two office product, but certainly feeling the effects of the pandemic still in the office space.
So I guess my answer to this question is from two different views, but when the pandemic started, I was working in real estate private equity as an LP investor. And so when March 2020 hit, we sort of froze on all new deals and we freaked out for a few weeks. And then kind of as time went on and the vaccine talk started happening, it was sort of like, to what you were saying, off to the races. So we did a lot of Southeast and Southwest Class B, Class C multifamily deals, because even if you're buying something at a 4 or 5 cap, if you can put on fixed 3% debt, you can get a really good cash yield and just worry about, your exit in 10 years or something. So that's pretty much what we were doing in multifamily and also industrial. And then personally, kind of used the slowdown of 2020 to start investing in deals with a friend, which kind of led to now my career, change or job change. So.
Well, I would second the thoughts on commercial real estate lending, that it definitely put the skids on closing certain loans. I would say the CMBS market pretty much froze up overnight. People were trying to figure out what to do. Luckily, our group, pivoted as well to asset management. Really figuring out what our borrowers were doing. For the office tenants, were they going into the office? Were their tenants going into the office? For our hotel clients, were they keeping the doors open? With hotel deals, you definitely have to go to your lender and tell them if you're going to cease operations. Or tell them if you're going to get additional debt. So working with them to get PPP loans. Some loans, like the general PPP loan, is okay because it's not going to be secured by your real estate. But things like EIDL, they would actually take a mortgage on. So those were no-nos. So there was really working with our sponsors to see how we could help them through this, but still protect our position. Just really working with them on modifications and figuring out how things were going to move forward, doing a lot of workouts and modifications. And then luckily in 2021, things did start to really speed up. I would say mostly in our fixed rate platform, we have an insurance company that we've started that offers transitional bridge loans. So we were doing a ton of that work. People kind of just figuring it out. Definitely negotiating those trigger events on, in cash management and things of that nature, where lenders like to make sure that they can get a hold of that cash if the real estate actually, goes into a distressed state. Because, you want to be able to know exactly how the property's doing, and not all the borrowers are totally perfect about sending in financials all the time. So it was definitely working with them, getting the bridge loan platform really up to speed. And now actually the CMBS world, had started to come back a little bit, but of course interest rates have kind of put the kibosh on that as well, right? So it's all wait and see. But we've been keeping ourselves busy and really just trying to help our clients weather the storm.
So Tatiana and Marnie, you both touched briefly on the future. So I'm curious from everyone if there's anything you want to add about what you're doing to prepare for a potential recession, or what you're doing now in this rising interest rate environment that's different from the floodgates opening in the beginning of 2021 and last year.
Well, I would definitely say our poor borrowers are having big heartburn over the cost of those interest rate caps. The SOFR caps literally are doubling overnight, pretty much. And we're trying to be creative. We're trying to think of ways that it's not going, we're going to be protected, so they're going to have the money to be able to buy the cap if they don't want to. Let's say we're doing one of our transitional balance sheet loans for 3 years. We offer a 3-year term, and they really want a 3-year term, but they don't want to buy the 3-year cap because that third year costs as much as the first 2 years. Do you want to buy a $200,000 cap, or do you want to buy a $400,000 cap? And what if you kick ass in your business plan? Oh, can I say that word? I don't know. Kick a dollar sign in your business plan, and you don't need that third year. So we're trying to be flexible and think of ways to help them save money but protect us. Like, for instance, switch to a 2-year term so you have that hard maturity, but start escrowing, maybe at month 12 for the cost of the cap, so that it's not like such a shock to the cash flow to come up with that amount of money to purchase at the end of your second year. So a lot of borrowers are very appreciative of that because they don't want to have to spend that additional $200,000 that they could be putting into this transitional asset to help the asset. So we're just having to try to think of really creative ways to, help clients through this crazy interest rate environment.
So I'll kind of start with the capital market side and then move to acquisition side. But basically, early in the year, we saw things start to creep up, and we actually pulled forward almost our entire financing pipeline and closed everything by June 30th. So we had, generally you have refinancings you have to do or other strategic deals that you might pull forward. And we, kind of throughout the year as things mature, you tend to address them. And, we all got in a room, I'd say late February, and decided, okay, let's get everything done now. And basically didn't sleep between March and June 30, but we had closed $3.2 billion of financings that month. So it was crazy, but, we're really thankful we did it, not only because of the underlying interest rate risk, but, banks have gotten pushback from regulators, and because of economic distress, just your spread, so the actual real estate risk component's gotten more expensive too, and there's just not as much availability of capital overall. So feel lucky that we did that, and we have a lot of runway, for our future maturities, but certainly managing interest rate risk is a conversation I'm having, pretty often, as I think everybody is. Separately, I think, distress actually can create a lot of opportunity. So if you think about it, if capital markets have, seized up, then it's harder for people to find new deals with debt, and it might be harder for people to refinance, and people with upcoming maturities might actually have a problem. So I'm, very kind of on one side, no one wants a downturn, but hopeful that if there is a downturn, it would present opportunities to, acquire, especially, office isn't financing well, and there's certainly some properties in New York that have debt maturing, so it'll be interesting to see kind of what happens, and again hoping for opportunity to kind of flip it.
Anything else to add, Moira or Kelly?
So I would say we were under contract, part of my new venture, on 3 deals going into June of this year, and they're kind of small, again, multifamily deals, nothing that high risk or transitional, but of course, like when interest rates move and you're doing Freddie or Fannie debt, I mean, it's like a very direct correlation of how much something is worth. Fortunately, we weren't non-refundable on anything, which means, like you really haven't spent the money yet, so had to have a lot of hard conversations with brokers and sellers. And as someone kind of starting out with a new business, your reputation is very important, so you have a lot of heartburn over that. But I think, when there's a really big movement in the market, everyone, like people who've been in the market for a while kind of get it, and it becomes like what's your next available option. And as long as all parties are somewhat reasonable and there's some impetus to sell, which you're always up against, like if somebody really has to sell or not, because, they don't have to. So I had to have a lot of hard conversations. So that's, I guess, not that tactical, but that. And then a lot of times if you're doing an agency loan on multifamily, you can lock rate early. So sort of I was became like a real CNBC squawk box watcher for a while, which is something I'd never done. And I basically felt like I was trading rates. And then I was trying to lock rate on the day I thought it was the lowest. And I did okay, but I could have gotten a little better. But now I feel fortunate that I did, because the closings gotten extended, but we're still within our rate cap period. So I guess some hard conversations and just things that I never in previous real estate roles thought I would be doing. But yeah, that's what I've been doing.
Yeah, and I would just say from kind of a lending perspective, I mean, across the board, valuations are down. The interest rates in general is what is impacting the transaction volume, and across the board, the transaction volume is down. And then from an underwriting standpoint, you're having to underwrite these higher interest rates and decreasing your loan amounts because the interest rate's higher. The ability for the property to create the cash flow to pay you back is kind of what's most important to a senior lender. And so that's really what's driving the market, and I think it will continue to. And we have a big meeting tomorrow with the Fed, so I think all eyes are watching to see what they're going to do with short-term rates.
Thanks, everyone, for that. It's really interesting to hear how, obviously, you're all dealing with rising interest rates, but the implications are slightly different for everyone depending what you do. So it's great to get that insight. So turning a little bit to being women in real estate, as we have established from Grace, not quite a women-dominated field yet, but what impact have you found that communities like Girl Gang have had in the industry on your career?
Well, I can start. Like Gabby and Michelle know. So Girl Gang directly impacted mine. I was at BBVA, and during the pandemic, we got bought by PNC Bank. And it kind of opened an opportunity for me to look around and see what was out there. And Girl Gang sends out a Work It Wednesday email, and they had JP Morgan in there. Sent them my resume, and I don't remember how quickly I got an interview, but it was very quick. Got a direct intro, and here we are today. So it's very important to be involved in these groups, and I wouldn't say that I've been to every single Girl Gang event, but just being plugged in, paying attention, and being proactive, and finding the people you get along with, make a genuine connection. It can make an impact.
We're going down the line. No, I'd certainly agree. I think. For me, it's not necessarily something I think of every day, and I certainly have probably worked with 90% men, 10% women, but I find that the women I'm exposed to, whether it's coworkers, counterparties, I tend to form relationships with a lot better, a lot quicker, and you have definitely a shared understanding and a lot of trust. So I'd say it's certainly, with the other women in real estate, I find that it works to my advantage to have that common ground, because we're probably all one of only a few women wherever we are. And then I'd also say the kind of relationships with women I have across the business certainly are ones where I can kind of ask, that honest question. So, is this an appropriate time to ask for a raise? What do you think? What do you think I should be looking for a new role? What should I speak up for? All of those kind of career development questions that are not necessarily, ones you want to ask someone that you don't really trust. I find that my network of, women in the industry has really kind of filled that crucial role personally.
Yeah, I'd agree with what everybody said. And for me, going back to business school, which this isn't like an advertisement for business school, but the good thing about when you go back to grad school, a lot of times is you're a little bit older out of college. And so you form your kind of parameters for making friends and stuff are very different. You're a little more mature. And so finding like-minded other women in grad school who were not even specific to real estate, but just very ambitious and very interested and interesting and doing different things. And it's important to, I think, have, like guys, for example, most guys, they stay working throughout their whole career and regardless of their family situation, and women may not, which is not good or bad. It's just sort of a fact. And so it's important, I think, if you're in the working world to like have a support system of friends and peers along with you. And so for me, that was like a really important group of people to come across, and now I'm working with one, so.
Yeah, I would definitely agree with everything that has been said about Girl Gang. I do think that it's a wonderful group that you guys have put together. Really a great place to just catch up with friends. A lot of my friends who I've known for many years in the industry have since met Gabby and Michelle and joined the group. And so I love it. If I'm going to a Girl Gang event, it's like I can come talk shop a little bit and then just catch up on what's going on in their lives. And we're all busy, so you don't necessarily have time to just make a separate date with everybody, but it's one place where, it's a small world of like women in real estate and real estate finance, and it's a great place to catch up, and you have fun. It's not, you don't feel like, oh God, it's this Girl Gang event, I have to just like, talk, it's boring and there's nothing, fun about it. They're really fun events. So I think that they definitely fulfilled something that was missing in the market for groups like this, so.
I feel pretty lucky that I'm new to the industry, and Girl Gang was like the first introduction I had to real estate networking events. So thank you for that. Okay, this will be the last question for me, and then we'll open it up to the crowd a little bit. Can you tell us the most useful piece of advice that you've been given in your career and the worst piece of advice that you've been given?
Yeah, I should have looked at these questions earlier.
I can start. So
funny. My first one is the worst.
yeah, I have best and worst. The best one you might have heard it a lot, but always be in a role where you're learning. I think that's really important. And I think for me, I personally go with my gut a lot. And with my first role, I felt like I had an amazing learning curve my first year and then learned nothing my second 2 years. And that was certainly kind of my impetus for saying, okay, I think it's time for me to have a change. And personally in my role now, I feel like my job is harder every year and I'm learning more every year. And I think it's just really important way to kind of measure if you're in the right seat, because especially I think in the early stages of your career, it's important to build as deep and sometimes as broad of a skill set as you can. And so if you feel like you're stagnating, it's probably the time to make a change. So that's really helped guide me. And then the worst piece of advice, I'd say, or type of advice, is very prescriptive advice. So where someone might say, I'm interested in real estate. Oh, you should do this, then this, because it worked for this other person. So when I was at UBS, I did basically corporate bond underwriting. And a lot of people had told me, why didn't you just move into the real estate investment banking team? You'll work more with clients, you'll get closer. And for me, I had a couple gut reactions. One, I wanted to get close to the asset, and real estate investment banking, so at mergers and acquisitions, those types of deals wouldn't have gotten me any closer to assets than I was. I would have spent more years, further from what I wanted to learn, and I don't think that would have set me forward. So I've had a lot of advice like that. Well, you should do this job for 2 years, it'll get you there. I think everyone has different skills and interests. And so I think it's way more about what you're learning and if those are skills you want to have versus, the title of the group and the prestige of the group necessarily. So I'd say those are probably my best and worst. Oh, and then someone once told me when I was in college to do wealth management because it was a chill lifestyle. That was probably the worst.
So I would say the best advice I received was when I was right out of the training program in underwriting, and when I had a question, they're like, I want you to answer it before you come to me, and then when you come to ask the question, explain what you think it is, and then I'll tell you how to do what you're telling me you want to do. Basically, you're smarter than you think you are, and you know what you're doing, and I believe in you, so think about it. So what did that do? I answered a lot of questions before I even went to ask them. I spent the time to do online research or whatever it was, or ask the person next to me before I asked my manager. But I thought that was really good advice because it helped me build more confidence in myself once I knew that I had the tools and I could figure it out and solve the problem. So I think that was really good advice. Bad advice is similar in that, like, oh, well, you need to stay in credit and underwriting for at least 3 to 5 years to build up your analytical skills. I was there for 11 months, and then I asked to move to New York and be in originations. And they said, yes, we would love for you to move there. So, you've got to kind of know yourself and what you want to do, similar to what you were saying, and put yourself out there. It might not always work out, but you'll be shocked at the number of times it does.
Is it my turn? Or your turn? Okay, so I feel as though, one of the first people I worked for, as I said, I'm a lawyer at a law firm. One of my bosses had said, I'd worked on something for him, and he said, Marnie, it's very important that you don't assume anything, right? You think you know, and you assume, and say what you mean, be very clear, and I think that's a great advice for young women starting, and just women in general. A lot of times we will be more timid, we won't speak up, we won't say what we mean, we won't say what we need, what we want, and I don't think that serves us. I think we do need to, say what we want, and men have been doing it for many years to great success. So when I started to do that in my career, I think things started to happen, right? But that said, I also think one thing to keep in mind is that, we can all sit up here and share our highlights in the highlight reel. My biggest advice would be don't get discouraged. Some days you're going to sit down and you're like, I applied for this and I didn't get it and I don't know why. And like, this sucks, But all of us feel that way. And my best advice from being in the commercial real estate finance industry for 20 years and dealing with plenty of setbacks is that it will get better. Someone will realize your worth, and the world is your oyster. Don't get discouraged is my advice.